So it's Wednesday again, and that means it's DeFi time. So it's Wednesday again, and that means it's DeFi time. And over the past 3 weeks, I think it's been now, most of these tokens that I'll be reviewing have gotten increasingly bearish as a broad movement back into King Corn, known as Bitcoin, has commenced, as illustrated by the Bitcoin dominance. If you pop on BTC.D is the ticker on TradingView. Add to that the 50 and the 200-day moving average. In general, any alt season or time span when alts have outperformed Bitcoin has occurred when Bitcoin dominance is below the 200-day moving average. Over the past few days here, we are above the 200-day moving average now for BTC. And I think it's pretty clear, just as in market sentiment, that BTC is finally moving and holding certain levels that altcoins just aren't. ETH isn't keeping up. Alts are shedding price everywhere I look. Essentially every coin I look, aside from SNX in this video, doesn't look great. And that's okay. These things go through cycles, right? It was DeFi season. It no longer is DeFi season. That's just kind of how it goes. So I do expect dominance to continue to increase over the next few months, maybe over the next 12 to 16 months. It could even last that long. We'll see. Usually the despair for altcoins takes a long time to set in. Bleeds are slow. Community strength needs to completely decay, wither away to nothing. All hope lost, that sort of thing, until you see some sort of bottoming in alts. Now, if we look at Link, probably one of the few exemptions along with SNX here. Still looks fine, still above the 200-day moving average, still within the multi-year pitchfork at this point. Technically multi-month, but whatever. It's at the median line brown range here, brown zone, rate of change, expected value, whatever you want to consider this. You draw 3 points, gives you a projection, and it's at no risk of expiring the bullish trend currently. If it gets below the 200, if it gets below the pitchfork on successive days, closing below the pitchfork, then you can say, all right, the Link dream is over, Marines. It's time to return to society. But until then, this still looks fine, especially relative to everything else I'm about to show you that you may or may not have seen lately. Because wow, AAVE, just complete devastation. They changed the ticker recently. I don't know why. I don't care, but it's got limited trade history now compared to what it once had. But so far, over the past few days, 23rd, so over the past week and a half maybe, this thing is just, you just get this curvature to the downside. Volume is picking up, which is good. It says bearish exhaustion is coming sooner rather than later, but it doesn't look great. You could argue maybe a bullish divergence on volume here, but this isn't a buy, right? I mean, look at these EMAs, look at this volume support. It's below everything. It's pushing all-time lows for this ticker chart history. So it doesn't look good. Below 30, I think, is inevitable for AAVE. For Uni, same story, perhaps even more bearish for a longer period of time over the past month. This has just slowly bled down. Again, you never want to see that because that will continue for as long as people get coins, and that's a long time in Uni's case. So I do expect this to break all-time lows. I do expect this to keep bleeding. You could hope for an Adam and Eve here. You could even hope for an inverted head and shoulders over the next week. Something messy with like a triple bottom. You can't quite argue a bullish divergence here on RSI, but it's undoubtedly going to get a bullish divergence if price does go lower, because RSI will unlikely break whatever this level is, 15, 10. So there was a lot of bearish momentum there. On the hourly, the MAs have yet to flip bullish. So that's one sign of the market bottoming out when the MAs begin to touch again. Tons of upside resistance. I think this thing keeps selling off in the near future. Until it's back above 3, it's probably just a ignore, wait for later. SNX continues to look okay to me, especially compared to all this other junk, which just looks sad. This has definitely had a downward trend over the past couple months at this point, but it's completely mean reverted. It's bull divving into a monthly pivot on the 200. So this still looks okay. Now this may just grind into nothing, flatness, EMAs will touch or cross bearish again, and then you just wait it out. You wait out the bullish recross, right? Like it's already had one on the daily, two if you count the earlier 2019 cross. So this pair, this ticker, has a history of bullish continuation already under its belt on a high time frame. I like the falling wedge. I like the bull div argument. I like the support here. I think it looks okay. As a little nibble maybe, with the expectation that this isn't going to just puke out the bottom sub $2 or something like that. So I like support at 280 at 3. I think it looks fine, honestly. If you're gonna take a chance on anything, it's probably this over anything else I'm about to show you. UMA, again, complete and utter devastation, straight to the core, likely headed for all-time lows. Again, you can argue some sort of bullish divergence on the hourly, but I'm not buying this, so good luck. There's a little bit of support here at 6 based on VPVR, but most of the volume has been above the current level. And this just has a history of bleed, right? So it's not like there's ever been a massive bullish continuation here. YFI looks incredibly bearish again. First it had this is the 4 hour. First it had the head and shoulders, which broke down. Hasn't reached that target yet. As it's reconsolidating, it's printing this descending triangle, which is a bearish continuation sign with a break at VPVR. So it doesn't look good. It looks like 5 to 8 is a decent target. There's no price history anywhere down here. You know, when this thing hit the scene, it just exploded. So on the way down, it's just going to go straight, right? There's straight up, straight down if there's no price history. If there's no volume support, that's just how this works. I did a full write-up on YFI for BTC this week, so check that out. But that definitely looks distinctly bearish. Comp looks okay, much like SNX, maybe on the other side of that fence where SNX looks like it's setting up for bullish continuation. Comp looks like it's setting up for bullish reversal with a 4 hour Kumo twist, a break above the 200 period moving average on the 4 hour imminent. This would be the first time it would be above either of those since early September. Upside's probably limited to 135. Then there's another argument for an inverted head and shoulders that you'd watch for maybe on the 6 hour or the 8 hour. But this looks okay. Again, compared to UMA and all this other junk, decent trade setup here. Ren looks mediocre, kind of middle of the road at the 200. You can see it had this massive range on both sides that kind of come to an equilibrium. So it's just about as neutral as it can get. Based on broader DeFi trends, I'd expect this to break down a little bit, but it's not as bearish, certainly, as most of this other stuff. Serum also looks just absolutely wrecked in any way you could measure it on the 4 hour. Below VPVR supports, below 15-200 period EMAs, arguably a continued bullish divergence building, below the monthly pivot, below the last remaining VPVR support before new all-time lows. There probably will be a time to buy this, but it's not now, in my opinion. Band had a chance at an inverted head and shoulders, which has failed. This is a great example of why you wait for a break above the neckline in this case for trend confirmation. Even if you didn't believe in the chart pattern, you could have waited for a break above the 50. So it's pretty clear that this is not bullish continuation in the near term. So if anything, charts like this should scare you out of the Ren trade. Maybe have you wait on the SNX trade. I still like this volume profile as far as a setup for something, but it's hard to get bullish on this in the near term. Maybe 253 monthly pivot down here, support pivot. But at this point, you're probably better off waiting for a 5200 bear cross bull cross before re-entering on that one. Needs some time. Sushi is kind of neutral and basing. This is a low time frame, so anything can happen very quickly, but it's certainly not bullish. It's probably similar to comp in that it's setting up for a bullish reversal. It looks as though some sort of fair price has been established over the past month as far as buyers and sellers coming to an equilibrium here. If I was trading this, I'd be looking at it on the 4 hour with the cloud. I'd be looking at these EMAs on the 2 hour as far as entry signals. A lot of volume here, because if this breaks lows, it's going much lower. But if it breaks to the upside, it's probably revisiting 150. So there's a decent risk reward setup here, depending on if certain levels break. There's just, for me, no need to sit in it right now. Like, you're waiting for a break above EMAs, you're waiting for lower lows. There's just no trade to be had there per se. And then lastly, looking at DOT again this week, pointed out an inverse head and shoulders last week that appears to have broken to the upside. It is now revisiting the neckline known as the throwback. 5200 has crossed bullish. It is above the current VPVR control node, point of control, whatever they call it, at around 431. In order to trade this effectively, I think you'd have to dig into the lockup periods and the unlock periods and see how much of the supply is unlocked when. Because although technically this might look bullish or neutral, leaning bullish, ultimately if I've got some DOT locked somewhere and I'm hoping to sell it, that's not going to help price, certainly. So overall, very few diamonds in the rough. Link still looks fine, probably the strongest trend-wise out of anything. SNX still looks like a great trade setup to me. And comp actually looks decent for a bullish reversal trade. So hopefully next week I've got some better news in the DeFi realm, but right now, these charts are going south rather quickly.